Hi, this is Tanzil. How are you? Everything's good? Okay, let's start. Today we will start our first lecture. So I will record more and more in the near future. So I will record all the F7 paper, and after F7 I will touch other subject as well, just for you guys. Okay, today the topic for today's discussion is IAS 33, so which is EPS, earning per share. So let me give you the basic concept before we move forward. Basic EPS is like for ordinary shareholder, like everybody is not a chartered accountant, like you are, like me, or anyone who is not a chartered accountant is an ordinary person. So for ordinary person, they only they see like how much per company is making profit. So their part is like before they invest in any company, they would see if he invests 500 in that company, how much he is gonna get in return. So if it is best to invest in which company. So the basic criteria for him is just the earning per share, how much each share is giving him in return. So if he invests $5 in a share, how much he will expect, how much company will give him in return. So this is the basic criteria. So I'll give you an example. If company A and company B, if company A has a 100,000 profit, okay, and if company B has a 200,000 profit, and both have the number of share 1000 shares. So basic EPS is profit divided by number of shares, profit divided by number of shares. So in this case the profit will be 100. Here 200,000 profit divided by number of share 1000, the profit is $200. Okay, company A, if a person invest in company A, he will get $100 profit per share against one share. And if he invest the same amount of money in company B, he will get 200. So the basic concept is he will always focus on the shareholders wealth, where he will get more shareholder wealth. So if company B is giving him more shareholder wealth or more profit against one share, so he will invest on company B. So this is the main criteria, because no one he doesn't even know, because being a ordinary person or who is not a chartered accountant, the only criteria is how much the company is making profit, how much he gonna get. So he has no idea, or he has no concern about how much company is getting from operating cash flows, or how much the company is making a profit from a loan or from other thing. So his criteria is how much he gonna get in return. This is his basic criteria. So let me see the profit. If we speak on the profit, what profit do we need to take in calculation of EPS? So I'll show you this. Which profit needs to be considered. Profit for EPS calculation, I'll show you. I'll just draw a profit and loss statement. I'll just make it sales. So this is your sale, so minus cost of sale. This is what we do. If you minus cost of sale, this is your gross profit. So this amount is your gross profit. So after gross profit, you deduct admin cost, admin expense, okay, or factory overheads, or all those costs. Okay, if you deduct all those costs, you will get net profit, or you will get profit before PBIT. It means profit before interest and tax. Profit before interest and tax, because you have to give tax and you have to give interest if you have any loan, so you have to pay interest. This profit is not for ordinary shareholders, so you have to pay interest expense. Now this amount, you after this you're gonna get profit before tax, and then you pay tax. This is PAT, profit after tax. So this is not a profit for shareholders. This profit does not belong to the shareholders, because you have to pay preference dividend minus preference dividend if you have any, and then this is the profit. This will be the profit attributable to ordinary shareholder. It means this is the profit who has this belongs to ordinary shareholder, no one has the right on this but the shareholders, ordinary shareholder. So whenever in this IAS, whenever I say profit or earning, it means profit after tax, this one, profit after interest, after tax, after dividend. So PAT minus preference dividend. Okay, so let's practice some few questions. Move forward. Okay, in this IAS 33 we're gonna study three main aspect. First is full market price issue. Okay, next is bonus issue, and the last is right issue. There are three types of issue what company can do. One is full market issue, full market price, bonus issue, and right price. First discuss this full market. It means company issued shares. When the company issue shares, they will get cash against those shares from shareholders, from ordinary shareholders, like all ordinary persons like me, you will buy the shares. So company will give you share, and we will give them cash. So you can say that the entry will be for company bank to equity shares, bank debit, and equity share credit for company. Okay, so when let me give you one thing. This is a cash issue. This means these shares are against the cash, so company is getting cash against those shares. So that cash, the company must have utilized that cash to someone else, to somewhere else, to earn more profit. It means if the company is getting cash and that cash can be utilized in any of the other thing to earn more. So in this thing, for full market price, you have to take effect from the day the share was issued. I'll just write it down. It's really important. This factor is really important, so I'm gonna write in red. Take effect from the day shares are issued. Okay, it means you have to take because the thing is, on that day when you issue the shares, on that day you get the cash. So company has they have already got the cash, so they can utilize that cash, so they can earn more profit or more investments. So for you have to take effect from the day from that day only, from the day the shares are being issued. Now let's discuss about the bonus issue. Bonus issue means free issue. It means company must be having a liquidity problem or a dividend problem, so instead of issuing a dividend or paying off the loan, it is more cheaper to issue the equity shares, because if we have already studied, debt is more expensive than equity shares. So equity shares are cheaper. So it means like for debt, I'll give you example for debts. So debt means debentures or loan notes or redeemables. So like you're, if for the instance you get the cash and issue the loan, or you take a loan and you get the cash, but you have to pay interest on that loan. So always debt is more expensive than equity shares. And then plus on top of it, the gearing ratio, because once the company takes the loan, they have to pay interest, and then the gearing ratio will come. So the gearing of the company will rise. So bonus issue is a free issue. It means no cash involved. So in that case, we need to take effect from the very first day. Take effect from very first day in this case. Okay, let's talk about right issue. What is right issue? Right issue means like if for example I'm like shopkeeper, or if for example if I tell you that just for example just think that I have a business of mobile, and you are being my customer for last 5 years. So we have already developed a like business relationship, or you are already my client or customer. So rang you. I said instead of finding a new guy, a new customer, it is quite easy for me to, or quicker for me to sell this phone to you. So I will ring you that I have already I got an iPhone, and plus this is a full A category, no scratch on the screen, the condition is very good. If I sell in the market, I would probably get 50,000, but you are my already my customer. So if you are willing to buy this, I will sell like in 45. You can have it in 45, or say 40,000. So you are offering him the reduced price because it's quite easy or quicker for the company to sell, and same goes for the client, for the customer. So for customer, as a customer point of view, he will not be comfortable in selling or in purchasing it. He will be thinking that maybe this company looks dodgy, or I don't know how much I'm gonna get in profit after a few years. So but we have already developed the like business relationship, because we are dealing with each other from last 5 years. So the customer will rely on the company more, instead of finding a new, because he will get the same product from the market in 50,000, but he is getting an offer from the like from the same guy in 45. So why not to take a discount, to take a less price? So this involves a bonus fraction, bonus and plus cash. Say for example, company say I will issue right issue 145. It means whoever has 5 shares will get one with lesser price. So for example, if for this 5 shares already held, the market price for this is each share is costing $6. So it means 5 shares will cost $30. So if say market price is 6, but I will issue price is $4. It means if you go to the market, you get the same share in $6. If you have 5, I will give you one share for $4. Okay, so let's see here. So one will give you, I can give you one share for $4. It means if you multiply these, it means 4. So how many total, what is the total cost? 30 plus 4 is 34, and 5 plus 6, how many shares? 6 shares. So if you divide 34 divided by 6, okay, we will discuss this theoretical right price, I will discuss later. But you can see here the market price was, in this question the market price was $6, but issue price, the you are issuing the same shares in 4. It means, what is the difference? $2 difference. It means $2 share equivalent to $2 shares you are giving it for free. So it has a free and cash involvement both. Okay, we will these are just the concept anyway, but I will practice more questions so we will get to know about this. Let's do some example, let's practice some. I just draw a line just for to make you understand. So 1st Jan x6, this is 30 December x6, 1 year. Suppose company has profit of say 20,000. Okay, and on this point, on this date January 1st, the company has 10,000 shares. Okay, and here as well the company has the 10,000 shares, 10,000. So how can we calculate EPS? Because the thing is, if you can see the opening balance and the closing balance is same, it means company has not issued any shares between 1 year. So just divide profit divided by number of shares. So it means profit is to 20,000 divided by 10,000, which is number of shares. So you will get $2 per share EPS. This is your EPS. Okay, this is quite simple, just for first example to make you understand. So we will practice first about full market price issue. So okay, let's do an example here. Same, we draw a number of here. This is 1st Jan x6, 31st December x6. Here the number of shares are 10,000, suppose, and profit has 25,000 profit. Suppose in 1st July x6 company issued number of shares, full market price issue, and how many shares are being issued? So company issued 5,000 shares, full market price. Okay, it means company had 10,000 shares in the beginning and they are issuing 5,000 more. So 10 plus 5, it means they have 15,000 shares by end of the year. 31st December they will have 15,000 shares. So if you divide, for calculating EPS, I will tell you, if you divide 25,000 divided by number of shares 15,000, this is wrong, because you have first 6 months, like from January till June, first 6 months you had only 10,000 shares, and after last 6 months from July till December, July, August, September, October, November, December, last 6 months you had how much? You had 15,000 shares. So in this in this answer you did not take any factor, you did not take any effect. So I told you already in the beginning that for full market issue, is a cash issue, it means we are getting a cash against it, so we have to take effect from the day the share was issued. Okay, we will calculate the EPS in a correct way now, because in the same year, 1 year, the company has already issued us number of shares. It means the number of share from opening balance and closing balance is not same, so you have to calculate weighted average number of shares. Weighted average number of shares. So you have to calculate number of shares, weighted average number of shares. So how we will calculate? On the very first day, how many shares were outstanding? 10,000 share was outstanding. You had 10,000 shares, and how many months it was outstanding? So we can see here till here, from January, February, March, April, May, June. It means 6 months it was outstanding. So you got 10,000 shares which was outstanding for 12 months, 6 months. Okay. Now you on 1st July, the day has come when the event is arrived. So on this day you have issued 5,000 more shares. It means you had 10,000 before and you are issuing 5,000 more. So 10 plus 5 is equal to 15,000 shares. Now you have 15,000 shares. And how many months it is outstanding? So here, the last 6 months. So it means you have last 6 months these shares are outstanding. So if you calculate this, so you have to take a effect of first 6 months, and then you have already got, you are issuing 5,000 more shares. Now you have 15,000 shares, and you have taken the effect of last 6 months from July till December. If you calculate this fraction, you will get weighted average number of shares, which is 12,500. So this is your weighted average number of shares. So now we can calculate EPS. EPS is equal to profit divided by number of shares. So profit is here, profit is 25,000 divided by this number of shares, which is 12,500. Now your EPS is $1.67. No, sorry, it's $2. So your EPS is $2. Okay, that was the first question. Let's do another example. Okay, question is, we will draw a timeline. Okay, first Jan X6, company has number of shares 5,000 shares. This is 31st December X6. Okay, and suppose here on 1st April X6, company issued full market price. And how many shares? 2,000 shares. It means company issued 2,000 shares full market price on 1st April. And then after a few months, on 1st November X6, company issued again full market price, and they issued us suppose 4,000 shares. By end of the year, how many they will have? So they will have this They will, because they were having a 5,000 shares before. Now they issued in April, they issued 2,000. 5 plus 2 7, and then here it means 7 plus 4. By end of the year they will have 11,000 shares. They will have 11,000 shares. Okay, let's do the example now. So I've already told you, if you see if the number of shares are same for opening balance and the closing balance at the last month or last day, the number of shares are same, just put the profit divided by number of shares, you will get the answer. But here you need to, because in 1 year company change or issued the number of shares, so you have to calculate weighted average number of shares. So you have to calculate weighted average number of shares. How we will calculate? On the very first day company had 5,000 shares. The company were having 5,000 shares, and how many months it was outstanding? So these shares were outstanding from January till March. It means January, February, March, 3 months. 3 months it was outstanding. Okay, now company issued 2,000 share. It means 5,000 company had, now they are issuing 2,000 more. It means 5 plus 2 7,000 shares. Now company has 7,000 shares. Okay, we will see how many, because I already told you. So this is the cash issue, or this is the issue with the price, market price. It means you're getting cash, so you can invest the cash so on that day. So you have to take a effect from that day only. You will not have to just take the effect from that day. So how many months it is outstanding? So we'll see April till from these are outstanding from April till October. April, May, June, July, August, September, October. 7 months. So you have to take effect of 7 months. Okay. Now you got for 7,000 shares, what 5 plus 2 7,000 plus 4, like 5,000 plus 2,000 plus 4,000. So it means you have 11,000 share by end of the year. And these shares were outstanding for how many months? For November and December, 2 months. So these shares were outstanding for 2 months only. So I chose the color, so you can see the red color matches there. Orange or yellow is 7 months, and green is this. So you can do here like this. Okay, so if you calculate all these, you will get 7,166 shares, which is weighted average number of shares. So this is your answer. Then you can profit divided by number of share, profit divided by this number of shares. So if your profit is 100,000, you can divide it with 7166, so you will get EPS. Please have a look, then we will move forward. Okay, this is my YouTube channel. Please do let your friends know. We will cover F7 and then other subject. Please tell your friends to subscribe. Okay, let's do some bonus issue now. Okay, I have already told you it's a free issue. It means we have to take effect from the very first day. Okay, let's do the example and you will know. Draw the line. 1st Jan X6, 31st December last day X6. Number of shares, suppose it has 10,000 number of shares, and here on suppose 1st August X6 company issued 1 for 10 bonus issue. Okay, so I have already told you we need to take effect from the very first day. Okay, first calculate this fraction. So we need to calculate bonus fraction in this bonus fraction. You can calculate this in two different methods. So I will tell you method 1, method 2. Method 1 is 1 for 10. It means you will get one free issue, one bonus issue against 10. Who has 10 share will get one for free. So whoever has 10 share will get one for free. So method 1 is you can either do this. So you got 10,000 shares. 10,000 shares you have before. So the bonus issue is you will get one share. You will get one share if you have 10 divided by 10. So you get 1,000 shares. Okay, now previously you had 10,000 shares plus now you're getting 1,000 share extra. You get 11,000 share at end of the year. This is the method 1. The method 2 is this is more feasible and more quick. It means you will get one share against 10, or whoever has 10 share will get 1. What is the percentage? 0.1. Just add 1 on top of it. 1.1. Just add 1 on top of it. It means if you take as a percentage, this is your 10%, and just add 100% in it, so you get 1.1. If you multiply this fraction 1.1 multiplied by how many shares you were having before, you were having this share before 10,000, so 11,000. Adjustment will be done automatically. So this way is more quicker. This is more quicker than this. So in the exam do this, so it will save your time. This will save your time. Okay, let's calculate weighted average number of shares. So in this, how many shares you were having before? 10,000 shares. And fraction is 1 for 10. So we have already calculated it here. This 1.1 is equal to 11,000 share. Now just put profit EPS for EPS. EPS is equal to profit divided by number of share, which is 11,000. Suppose your profit is 25,000 divided by 11,000. So this is your EPS. Simple. Now if I say, instead of this, if I say 2 4 5, it means she already held. If I say whoever has 5 will get 2 for free. This means 2 divided by 5 is equal to 0.4. Just add 1 on top of it. It means 40%, just one add 1 on top of it, so 1.4. If you multiply this with the 10,000, it means how many number of shares you will issue. Let me calculate. I guess 14,000, probably 14,000. Yeah, okay. Let's do another example. Now I will do some example with the multiple number of years. This is 1st Jan x6. This is 31st December x6, and here 31st December x7. It means this is x6 and this is x7 year. Year is changing now. Okay, let's see in here. Suppose the shares, number of shares are here, the number of shares are 10,000, suppose. Okay, and here as well 10,000. No share was being issued in 2000 x6, and profit is suppose 20,000 profit for both years. Suppose this year and this year also is 20,000 profit for both years. For this, how we will calculate EPS? EPS is equal to profit divided by number of share. Profit is 20,000 divided by number of share is 10,000. So it means 2 per dollar is your EPS for x6. This is x6. Now x7. Here, suppose on 1st November x7, after next year, in the next year, company issued 1 for 5 bonus share issue. It means whoever has 1 share will, whoever have 5 share will get 1 for free. So in this month they issued 1 bonus issue. So when you open a question, just do please do keep an eye on the right issue or the bonus issue. If you have any right issue or bonus issue, just take effect from the very first day before you calculating the EPS. So how this is the last day number of share was 10,000. It means last year closing balance will be the opening balance for this year. So it means you will have weighted average. We will calculate here. Number of you had 10,000 shares at the beginning. Now I have already discussed, for bonus issue we have to take a bonus effect, bonus fraction or bonus factor from the very first day. We will calculate the bonus fraction BF. We will calculate the BF first. So whoever has 5 share will get 1 for free. So 1 divided by 5 is equals to 1 divided by 5, you will get 0.2. just add 1 on top of it. It means 1.2. If you, this is your bonus fraction 1.2. This is your bonus fraction 1.2. Or you can do add this way, or you can calculate the other way around. It means you were having for bonus fraction, the method 2 is you were having 10,000 share before, right? And now you will get 1 share if you have 5 share. You will get 1 share if you have already 5 share in hand. So it means you will get 2,000 share. If you add these two, will give you 12,000, and if you multiply this with the 10,000, is will give you the same 12,000. The answer for these are same, but this is more quicker. So this is your weighted average number of share, which is 12,000 in this year. So just profit is now EPS. How we will calculate EPS? EPS is profit divided by number of share. Profit divided by number of shares. 20,000 divided by 12,000 will give you 1. This will give you $1.67 per share.
ਸੁਬਾਹ ਨਾਸ਼ਤੇ ਦੇ ਵਿੱਚ ਉਹ ਚਿਕਨ ਸੈਂਡਵਿਚ ਖਾਣੇ ਕੋਈ ਖਾਣੇ ਜਿਹੜੇ ਮੰਮੀ ਨੇ ਨਹੀਂ ਬਣਾਏ ਸੀ ਉਹ ਬਣਾਏ ਛੋਟੇ ਕੰਟੇਨਰ ਚ ਪਏ
Okay, for this the EPS is 1.67. So if you this is your X7. So if you do if you do the comparison, from this year EPS with the last year EPS, so who is not a chartered accountant will say, oh, the previously the company was making more profit, their company was generating more profit. Now maybe because of the performance has been declined, so the performance has been declined, or maybe the company is not performing well, or a company is not making good profit, so the ordinary person will think of selling the shares instead. So this is not the like with like comparison, because you will see last year there was no bonus issue, this year there was no bonus issue, this year in 2006 there was no bonus issue, but X7 there was a bonus issue. So if you increase the denominator, the value will decrease. This is a mathematical anyway. So if you increase or your denominator, so the answer will be reduced because the denominator is getting bigger. So this is not the like with like comparison. So how we will make it like with like comparison? We calculate as restated EPS. We calculate restated EPS. So whenever companies send a financial report or a annual report to the shareholders, they will send 2-year report, like last year report, and they will report this year report as well. So the ordinary person can do the comparison. They can compare the last year performance with this year performance, or they can compare the last year profit with this year profit. So we need to calculate restated EPS. So how we will calculate the restated EPS? The formula is, write it here, last year EPS multiplied by 1 divided by BF. So reverse the bonus fraction. This is your restated EPS. So restated the EPS, how we will calculate restated EPS? We will, last year EPS was $2. This was the last year EPS. So 1 divided by bonus fraction. Bonus fraction was, this was the bonus fraction. So this was your bonus fraction. So if you just drag it here, 1.2, so it will give you the same. So now you will see this matches this. So restated EPS is this. This is your restated EPS. The restated, we need to calculate how we will calculate restated. Last year EPS divided by multiplied by 1 divided by bonus fraction. Okay. Okay. Let's do one more example. X8. So this is gonna be your December X8 and this is December X9. Okay, in this day, on the very first day, company had suppose 20,000 shares. Here company has 20,000 shares. In the middle of the year, suppose on 1st August, X8 company issued full market price. They issued 5,000 shares. It means they were having 20,000 shares before and they are issuing 5,000 more. It means they will have 25,000 shares by end of the year. On 1st January, company had 20,000 shares and they are issuing 5,000 more. It means by end of the year they will have 25,000 shares. Okay, let's calculate the 2000 X8 first. This is X8 and this is X9. And suppose here we will calculate on 1st November X9 they did bonus issue 2, 4, 5 shares bonus here. It means they did bonus issue. So this is your X8 and this is your X9. So we will need to calculate EPS, but we have to calculate weighted average number of share, weighted average number of shares. How we will calculate number of shares? So we were having 20,000 shares before. They were having 20,000 shares before. How many months it was outstanding? So from here till here, so January, February, March, April, May, June, July, it means 7 months. So they were outstanding for 7 months. These shares were outstanding for 7 months plus. Okay, now the company had 20,000 before, 5,000 they are issuing now. It means they will have 25,000 shares. And how many months outstanding? From here till here, August, September, October, November, December. It means 5 months. So you have to take effect for 5 months. Okay, So the number of weighted average number of shares is 22083 shares. And suppose you have a profit, profit is 50,000. So how you will calculate EPS? 50,000 profit divided by number of shares, which is 22083. You will get a EPS of 2.264. This is your EPS, last year EPS. Okay, this is X8 EPS year. This is your last year EPS last year, and last year EPS will be last year balance will be the opening balance for this year. Okay, we will calculate the EPS here. Have it same the weighted number of shares. How we will calculate? First we have to calculate this factor, bonus factor. How we will calculate? Whoever has 5 shares will get 2 for free. So whoever has 5 shares will get 2 for free. So 2 divided by, if you see 2 divided by 5 is equal to 0.4. Just add on top of it. So 1.4. If you multiply this with the number of shares, the adjustment will be done automatically. So if you divide 1.4 multiplied by 25,000, it means you will have 35,000 share now. Or if you want, I can calculate the other method. Like it means you were having 25,000 shares before. It means you were having 25,000 shares before. Now how much you are issuing now? After this you are issuing 2 share for free, whoever has 5. So you will have how much? 10,000 shares. So if you add these two, will give you 35,000. Same, this is quicker, this is more quicker. Okay, we have already calculated the bonus fraction. So how we will calculate weighted average number of shares? You have 25,000 shares before. Just multiply this with this 1.4 is equal to, you will get 35,000 shares. So if you have a profit here, like take 60,000. Okay, 60,000 profit. So EPS is 60,000 divided by 35,000 number of shares. It means it will give you $1.71. This is your EPS for X9 year. Okay, now let's calculate the restated EPS. How we will calculate restated EPS? We have already studied. Is equal to last year EPS multiplied by 1 divided by BF. So this is your formula for restated EPS. So restated is equal to last year EPS was this 2.264 multiplied by the bonus fraction. This is your bonus fraction. So 1 divided by 1.4, which will give you around $1.26. So now you can see they are pretty close. Now you can see these values are pretty close, because here in this year you did bonus issue, but in last year it was full market price issue. So that is why you cannot do the that is why, because it was not a like with like comparison. For like, to make it like with like comparison, you have to do these things which I have done it. Have a look on this question, then we will move forward for the right issue. We will do some question practice for right issue.